Good afternoon, sir. My name is Valina Wiwin. I am from class Accounting G Morning. My student ID is 18104264449. Sitting here, I am invited by lecturer to answer his question. The question consists of 3 parts. Namely, question on part A deals with the daily activities in the classroom. Question on part B deals with the accounting theory. Question on part C deals with accounting article and accounting video. I start to answer the question on part A. The first question is, do you always attend the lecture of English for accounting? If yes, how often do you attend the lecture of English for accounting, and why must you attend the lecture, and what benefits have you got from attending the lecture of English for accounting? Well, my audience, my answer to the question on number 1 is here. Always attend English accounting courses, that is, in the presence of a full without a single one not being followed. The reason I attended English is accounting, so I could take the final exam, and also attend English is accounting, so I could take the final exam and also what to know the account names in English. The benefits that I can get in learning English accounting, that is, I have been able to read in English well from before have known the name of accounts. Well, that's all my answer to the question number 1, and then I proceed to the question number 2. Do your structured exam give? If yes, how many voice record have you done? Mention the title and explain them in short. Well, my audience, my answer to the question on number 2 is here. Have done 35 student assessment. Number 1. Accounting. Accounting is the system and comprehensive recording of financial transactions pertaining to a business. Number 2. An article is a piece of writing that is published in a newspaper or magazine. Number 3. Accounting cycle. The accounting cycle is a collective process of identifying, analyzing, and recording the account event of a company. Number 4. Accounting is important for business as a way to document financial activity and learn from the number. Number 5. In financial accounting, an asset is any records owned by the business. Anything tangible or intangible that can be owned or controlled to produce value, and this is held by a company to produce positive economic value is asset. Number 6. Accounting basic. The explain of accounting basics will introduce you to some basic accounting principles, accounting aspects, and accounting terminology. Number 7. A balance sheet is a financial statement that reports a company's assets, liability, and shareholder equity at a specific point in time, and provide a basis for company rates of return and evaluating its capital structure. Number 8. The general purpose of the financial statement is to provide information about the result of operation, financial position, and cash flow of an organization. Number 9. All liability account that reports the amount that a company will have to spend to repair or replenish a product during its running period. Number 10. A business entity is an organization that uses economic records or inputs to provide goods or services to customers in exchange for money or other goods and services. Number 11. Financial accounting is the process of recording, summarizing, and reporting the myriad of transaction results from business operation over a period of time. Number 20. A mortgage payable is the liability of a property owner to pay a loan that is secured by property. From the perspective of the borrower, the mortgage is considered a long-term liability. Number 30. Long-term liability definition. Obligation of the instruments that are not payable within 1 year of the balance sheet date. Two examples are bonds payable and long-term notes payable. Number 14. Thetford much popular free online directory with definition, spell check, or organs, examples, sentence, audio production, word of the day, and more. Number 15. Current liabilities are a company debts or obligations that are due within 1 year or within a normal operating cycle. Number 16. Rules of accounting that shall be followed in preparation of all accounts and financial statements. Number 17. Warranty liability definition. A liability account that reports the estimated amount that a company will have to spend to repair or replenish a product during its warranty period. The liability amount is recorded at the time of the sale. Number 18. Type and form of business. A business entity is an organization that uses economic records that are input to provide goods or services to customers in exchange for money or other goods and services. Number 19. Business organization. An entity formed for the purpose of carrying on commercial instruments. Such an organization is predicated on system of law governing contracts and exchange, property rights, and incorporation. Number 20. A mortgage payable is the liability of a property owner to pay a loan that is secured by property. From the perspective of the borrower, the mortgage is considered a long-term liability. Number 21. Liability. A liability in general is an obligation to or something that you owe somebody else. Number 22. Liabilities explained. Liabilities are vital aspects of a company because they are used to financial operation and pay for large expansion. Number 23. In management accounting or managerial accounting, manager use the provision of accounting information in order or to better inform customers before they decide matter with the organization, which is the manager and performs of control function. Number 24. Why accounting important business spend a great amount of time and money in recording their financial transaction. Accounting is extremely important for recording the financial transaction in a business. Number 20. Number 25. Closing entry. A closing entry is a journal entry made at the end of accounting periods that involves saving debt from temporary accounts on the income statement to permanent accounts on the balance sheet. Number 26. Capital market. Capital markets are venues where saving and investment are channeled between the supplier who have capital and those who are in need of capital. Number 27. Accountability is a noun that describes expecting responsible, and it can be personal or very public. Number 28. Liability. A liability in general is an obligation to or something that you owe somebody else. Number 29. Accounting and financial management are related to the extent that accounting is an important input in financial decision making. Accounting involves into preparing and examining financial records, whereas in financial management involves into planning to achieve its various financial objectives. Number 30 is investor information. The investor relation section provides information to current and potential security analysis and anyone who is interested in the financial and operating performance of the company. Number 31. The income summary account is a temporary account into which all income statement, revenues and expense account are transferred at the end of an accounting period. The net amount transferred into the income summary account equals the net profit or net loss that the business incurred during the period. Thus, shifting revenues out of the income statement means debit the revenues account for the total amount of revenues recorded in the period, and crediting the income summary account. Number 32. Accountant. An accountant is a professional who performs accounting function such as audience or financial statement analysis. Accountant can either be employed with an accounting firm or a larger company with an internal accounting department, or they can stay set up in individual parties. Number 33. Definition of long-term liability. A long-term liability is an obligation result from a previous event that is not due within 1 year of the date of the balance sheet. Number 34. Current and long-term liability. Owning a business is not just about counting how to market your goods for profit, but also knowing how to manage your finance. This means that whether you like or not, you need to know the terms used in the finance world to be able to analyze, report, and determine your business. Number 35. Difference between a confident curve is a aquifer below the land surface that is strengthened with water. Layers of invisible material are both above and below the aquifer, causing it to be under pressure so that when the aquifer is strengthened by a wheel, the water will rise above the top of the aquifer. Well, that's all my answer to the question number 2. And then I process to the question number 3. You have been asked to sing in group and video record your sing. Mention the title of your sings on explains what the singer tell you. Well, my audience, my answer to the question of number 3 is here. Song Little I Wake Up, which is hide from the lyric of the song is after waking up, washing your face, brush your teeth, combing your hair, eat breakfast, and going straight to school. That's the activity he always does every morning. Song title Brother John. What the lyric say is where John's brother is still asleep or not, the morning be right. Well, that's all answer to the question number 3. And then I process to question number 4. Do you video recording in English for accounting? If yes, mention the title of the article and the videos you have video record and explain in short every article or video you have video record. How many video recording have you do? Why? Well, my audience, I answer the question on number 4 is here. I did video recording of English total 35. The first general journal. A general journal is used to record unique journal entries that cannot be processed in a more efficient manner. For example, check return sales invoice, issue forecast invoice receipt, and other can be recorded in a comprehensive accounting system when the documents are processed. Number 2. Managerial accounting. Managerial accounting, also known as cost account, in the process of identifying, measuring, analyzing, interpreting, and communication information to management for the purpose of an organization goals. Number 3. Information about the transaction and event of a business is captured and summarized into reports that are used by persons interested in the entity, but you likely do not result to company expense tax. Number 4. Financial accounting. Consider that financial accounting is targeted toward a broad base of external users. None of who control the actual preparation of report or have accounts the underlying detail. Their ability to understand and have confidence in report is directly that are used to prepare the reports. Without such standardization, reports of different companies could be hard to understand and even hard to compare. Number 5. Managerial accounting. Managerial accounting information is intended to serve the specific and varied needs of management. Number 6. Accounting. Accounting is the system and comprehensive recording of financial transactions pertaining to a business. Number 7. An article is page of writing that is published in newspaper or magazine. Number 8, an accounting cycle. The accounting cycle is a collective process of identifying, analyzing, and recording the accounting event a company. Number 10. In financial accounting, as asset is any records owned by the business, anything tangible or intangible that can be owned of correlate to procedure value and that is held by a company to produce positive economic value is an asset. Number 11. Accounting basic. This explanation of accounting basic will introduce you to some basic accounting principle, accounting connect, and accounting terminology. Number 20. A balance sheet is financial statement that reports a company asset, liabilities, and shareholder equity at a specific point in time and business or company rates of the and irrelevant capital. Number 13. The general purpose. The financial statement is provide information about the result of operation, financial position, and cash flow of organization. Number 14. Financial accounting is the process of recording, summarizing, and reporting the myriad in transaction resulting from business operation over a period of time. Number 15. A mortgage payable is liabilities of a property owner to pay a loan that is secured by property. From the perspective of the borrower, the mortgage is considered a long-term liability. Number 15. Current liability are companies' debts or obligations that are due within 1 year or within a normal operation cycle. Number 17. Rules of accounting that should be followed in prepare of all accounts and financial statements. Number 18. Warrant liability definition. A liability account that reports the estimate amounts that a company will have to spend to repair or replace a product during a warranty period. Liability amount is recorded at the time of sales. Number 19. Types and form of business. Entity is an organization that uses economy, resources, or input to provide goods or services to consumers in exchange for money or other goods or services. Number 20. Business organization. An entity formed for the purpose of carrying on commercial interests, such as organization, predicted or system of law, government contact and exchange, property needs, and incorporation. Number 21. A mortgage payable, the liability of a property owner to pay a loan that secured by property from the specific order the borrower. The mortgage is considered a liability long time. Number 22. Liability. A liability in general is an obligation to owe something that you owe somebody. 23. Liabilities explain. Liabilities are vital as a company because they are used to financial, operational, unpaid for large expansion. Number 24. In management account or managerial account, manager use the profits of account information in order to better inform themselves before they decide matter with their organization. Number 25. Why accounting important? Business spend a great amount of time and money it's recording their financial transaction. Number 26. 6. Closing entry. A closing entry is a journal entry made at the end of accounting period that involves shifting debt from temporary account on the income statement to permanent account on the balance sheet. Number 20. 7. Capital market. Capital markets are venues where saving and investment are held between two suppliers who have capital and those who are in need of capital. Number 28. Accountability is a noun that expects responsibility, and it can be personal or very public. Number 29. Liability. Liability in general is an obligation to or something that you owe somebody else. Number 30 is here. Song title I Wake Up. Number song I Wake Up, which is cited from the lyric of song, is after waking up, washing your face, brush your teeth, combing your hair, eating breakfast, and going straight to school. That's activity he always does every morning. Number 31 song title Brother John. What the lyrics say is whether John brother is still asleep or not, the morning bell strike. Number 32 accounting equation. The accounting equation is considered to be the foundation of the double entry account system. The accounting equation shown on the company balance sheet will be the total of all company assets equal the sum of company liabilities and shareholder equity. Number 30 the account table. The obligation of an individual or organization account for its activities is reachable for them and that closes the result in transfer manner. It also includes the report table for money or other result property. Number 34 accounting worksheet. An accounting worksheet is a tool used to help bookkeeper and accountant complete the accounting cycle and prepare year-end reports like index trial balance, adjusted journal entries, adjusted trial balance, and financial statement. Number 35 the history of accounting. Our accounting is thousands of years old and can be traced to ancient civilization. The early development of accounting dates back to Mesopotamia and is closely related to development in writing, considered money, and early auditing system by the ancient Egyptians and Babylonians. By the time of the Roman Empire, the government had access to Dalen's financial information. Well, that's all my answer to question number 4. And I proceed to question number 5. Mention and explain the material you have studied from your lecture and what benefit have you got from the material you have studied. Well, my audience, my answer to the question on number 5 is here. Material that I have got from learning in class is about accounting. Accounting is the systematic and comprehensive recording of financial transactions pertaining to business. General journal. A general journal is used to record unique journal entries that cannot be processed in a more definite manner. For example, check reader, sales invoice, issued purchase invoice, receipt, and other can be recorded in a company's accounting system when the documents are processed. Well, now I answer the question on part B. Question on part B, the question deals with the account theory. Well, that's all my answer to the question number 1. Open this link and you must give direction when you answer the question you made in this link. Well, my audience, my answer to the question on number 1 is here. Number 1, the owner invests personal money in the business. Increase in asset accountability does not have an effect. Increase in owner equity because there is an investment, the increase in asset and capital. Number 2, the company receives cash from a bank loan, asset increase, liabilities no effects, and owner equity increase. Number 3, which for the following will cause owner equity to increase? Costs attracts owner income, which can make owner equity increase is income. Well, that's all my answer to the question number 2. Business transaction following is a least common transaction. Well, my audience, my answer is on the question on number 2 is here. 1. Receives cash from common stock, an increase in a asset and increase in owner equity. 2. Purchase supplier for cash, a decrease in a asset and decrease in owner equity. 3. Purchase equipment on account, a decrease in a asset and a decrease in owner equity. 4. Billed customer for service on account, an increase in a asset and an increase in owner equity. 5. Paid creditor on account, a decrease in a asset and decrease in a liability. 6. Refits cash from customer billed on account, in a increase in a asset and increase in owner equity. 7. Paid rent for the month, a decrease in a asset and a decrease in owner equity. 8. Refits payments for service from cash consumer, and increase in asset and increase in owner equity. 9. Paid cash dividend, a decrease in asset and a decrease in owner equity. Well, my audience, my answer to the question on number 3 is here. Problem. Debit and credit following is a least common accounting transaction. A. Issuance of common stock to a holder for cash. Cash in debit and capital are credit. The reason is because asset increase and capital also increase. Payment of rent for the current month. The burden of rent on the debit and cash on credit. The reason is purchase of supplier on account. You place on debit and cash in credit. The reason is because the equipment increase while the asset decrease. Payment to a creditor on account, the burden on the debit and cash on the credit. The reason is because the assets are recorded. Fee earned and billed to customer. Cash on a debt and income on credit. The reason is because asset increase, receipt of cash from customer payable billed on account, cash on debit and income on credit. The reason is because property increase. Payment of cash in dividends to stockholder. The burden on the debit, cash on credit. The reason is because payment for a 3-year insurance policy. The expense of the on debit and cash on the credit, including because the burden increase and the asset decrease. Increase only the expense. Reports of a cash service to be profit in the future, cash on debit and income on credit. The reason is because asset increase. Well, my audience, my answer to the question on number 3 is here. That's all my answer to the question on part B, and I present to the question part C. The question on part C deal with the article and video. I start to answer question on part C. The first question is balance write the accounting book that has been given by your lecturer, mention on title on the book and how reader the book, how many page does the book have, how many capital does the book have, and what does each capital tell you. Well, my audience, my answer to the question on number 1 is here. The title of this book is about posting journal entries to general ledger. This book has 29 pages. The general journal is a permanent record organized by account number. Posting is the process of transfer information from the journal to individual account in the ledger. The trial balance is a proof that total debits equal total credit. The ledger account used by business are kept on spreadsheet or kept in a book or file called a ledger. It is important for a number of reasons. This creates a record of the impact of business transaction on its account used by a business. It also helps manager find the current balance of special account. Well, that's all my answer to the question number 1, and then I process to question number 2. You can get the article and on the WA group. Your must explain the context of the article and your own English word. Well, my audience, my answer the question of number 2 is here. The importance of protecting plans, individuals, credits, creator, and nature are asocial. Plans record a dense demand for diverse credits, a net place to add, and human need everything to surface. Globalizing make us of how will now to you. Globalizing can fix the growth of economy inevitably. At long last, the vast differ from the face get to be one of fundamental variable that still around us, and of natural harm to a regular relation. For instance, a verbal temper, effervescent crisis, downpour, rush, impact, economical combination, etc. Well, my audience, my answer to the question on number 3 is here. Link number 1, video title about accounting basics, the speaker in latest accounting. Accounting basics. This explanation of accounting basics will introduction you to some basic account principle, accounting concept, and accounting terminology. Once you become familiar with some of those terms and complete, you will feel criminal navigation through the explanation, question, puzzle, and other features of accounting come. Link video number 2, video title about real personal nominal account and golden rules of accounting. The speaker is CBE Kamar. Accounting is a process of recording, classifying, and summarizing financial transactions. Is a significant manager and interpretation resultary activities is both sales and art. For every type of NIV, wherever is tracked on small in size, it's very important to have a business operation, and econ must have a good understanding of the term used in accounting and type account. An account is the system present of all transactions related to a particular head, and account so summarizing record transaction related to connect person or thing. Okay, thank you.